What is up, YouTube family? Good afternoon or good evening if you're on the East Coast. All over the world, hey, we're live on the internet, so you could be watching from anywhere. Here's what's going on. I'm going to just shoot you straight. This will be a relatively quick video, but I want you to know what's going on with mortgage rates. As we know, we've been projecting that rates are going to go up. They went up in 2021. Mortgage bonds lost about 400 basis points in 2021. So far in 2022, we've lost over 100 in 4 days. So we're going to see rates go up. Here's a quick article from CNBC. Mortgage rates hit 9-month high. Loan demand drops. What you're going to see is, do I have this open somewhere? Here it is. Get the right marker. What you're going to see is you're going to see mortgage applications, declining basically. Is this going to work? No? What am I doing wrong? There we go. You're going to see mortgage applications just sort of go like this, and you're going to see mortgage companies start to shut their doors and stuff like that. Like, that's all coming. It's one of the reasons I went independent. And this is actually going to be the first video that I actually pull live rates on a video so you can see. And I promised to pull the curtain back, and that's exactly what we're going to do. But let's zoom out on the mortgage bond chart here just for a second for starters and take a look at this. Let me get my ugly mug out of the way here. All right. So this is mortgage bonds. This is COVID over here. If you're wanting to know what is this craziness going on the left side of the chart, that's COVID. Okay. Went absolutely bananas. And everyone was unsure about what was going to happen. Federal Reserve stepped in, and look, they moved this thing up so fast. That is so much wealth destruction and creation for the right people on the right side of those trades. It's just crazy. But what happened in that case right there is a lot of the banks, their hedges got stop lost. They got liquidated. And they lost a ton of money. And that was basically highway robbery for mortgage banks right there. But I won't go into that. The bottom line is this. Here's what happened last year. Here's January, and mortgage bonds went down pretty much the whole year. That's top to bottom. Now, so far this year, we're not seeing anything good happening here. We're seeing pretty much just straight down. The bottom line is we've got support that we're on right now. We lost 19 basis points today. And the next layer down is about 100 basis points. And the next layer down from there is 200 basis points. And that's all in play right now. So rates have gone up, but they haven't exploded yet. A lot of people can still save money by refinancing. A couple ways you can do it. If you have PMI, you bought a house in the last year or two, it's probably gone up enough in value that you can get rid of your PMI. So even if your interest rate stays the same, you do a refi, you knock off the PMI, you save yourself some money. That PMI is not tax deductible, so it's a really ugly thing. There's no reason for it. Especially if you can flip from FHA to conventional, get rid of your PMI on the FHA loan. Your PMI never goes away now. So that's something to look at. So rates haven't gotten that bad yet, but believe you me, they're going to. There is no catalyst here. We'll look over at bonds. Is the 10 years at 1.72 already. Yikes. Look at that. Already up to 1.72. It looks like it got to 1.75 today at some point. See here, 10-year Treasury yield tops 1.75 as rate spike to start 2022 continues. That is what's going on. So this is just a reality. This is financial markets. What happened is basically, the Federal Reserve was pumping stimulus into the market. They did it for a very long time. It has caused major inflationary pressures, and now they are sort of saying, oh, okay, well, maybe we should get out of the way. I should have pulled that article up. But basically what happened on Wednesday, the reason the market had so much pressure was because the Fed, released their notes from a few weeks ago stating that, things are much worse than they expected. Because things are much worse than they expected, they're actually accelerating their plan, which was already an acceleration of the original plan to unwind this stuff. So, we're going to see pressures. Rates are going to get worse. The second half of this year is probably going to be the worst of it. And that's probably where, listen, I know I've been saying this since last year, and there's some people who reached out to me to refi who didn't, or at least they didn't refi with me. I hope they refinance somewhere. I told them to pull the trigger. I will shoot you straight. I don't need to do a loan. I'm not in a desperate situation. Fortunately will never be for the rest of my life. I'll never tell you like, hey, just to slam you into a loan. I'll shoot you straight. So I'm telling you right now, if you want to refinance for whatever reason, maybe you want to take cash out, you want to remodel something, add an ADU, get rid of your PMI, whatever it is, look at it sooner rather than later. It is going to cost you money if you wait to refinance now. That I am certain of. I'm certain of that. There is no catalyst for rates to get better. So let's do our first live look. How about that? Let's take a look. Okay. So this is a pricing engine. So this is kind of a little behind the scenes action. One of the reasons I became independent is because I didn't want to be married to a rate sheet. And when you work for a specific bank, you are. It's basically what happens is you are married to a rate sheet. Here, let me get my disclaimers in real quick while this is taking a second. Derrick Evans, NMLS 155010. I'm a VA home loan specialist. We can do all kinds of loans, of course. You can always call or text if you want to buy a refi. Send me an email. The information right there. All right, let's get rid of that. It'll also be below. Let's beef this up so you can see what I'm looking at. Okay. So this is Loan Sifter is a program that's used by brokers to basically figure out what bank has the best rate. So when you're a broker, and this is why I also encourage people to use an insurance broker when you get your insurance quotes, because they have the same setup for insurance where they can shop and they can use whatever carrier is going to be best for you. Your specific situation may be better with this bank or that bank. So when you work as a loan officer for a bank, a specific bank, you kind of have to go find the customers that are best for that fit for that bank. Whereas if you're a broker, you can, help customers who have all sorts of different needs, and you go and you find the bank that's best for them. So what we're going to look at here, I'm a VA specialist, so we're going to look at VA first. And since we're talking about refinancing, let's look at some IRRRLs here. We're going to do a California refi here, $1 million value. We're going to say you bought it last year for $800,000. Okay. We're going to say you have 780 credit. So these are all the things we have to fill in. Property zip, I'll just make one up. All right, fees in is, what you do when you don't want to charge any lender fees. Primary residence, all that stuff's already filled in already. And this is kind of how it works. So you can look and see, okay, who has the best rate? Okay, in this case, it's this company here. We're able to pick that rate sheet, and you can use that rate sheet to do your loan. If it were a different bank for some reason, here's Flagstar. A bunch of these are retail banks, Loan Depot. A bunch of these are retail banks. Freedom is down there. But we have their wholesale connection. So you'll see a lot of it says like United Wholesale or Orion Wholesale or Loan Depot Wholesale. So what happens in the mortgage industry is you have layers, what we call cost layers. And those cost layers start with obviously the money, right? The money has a cost. So to get the money from the ultimate bank end user, you have a cost for that. And then typically if you work at a bank, you have a cost to the branch. The branch has their own margin in. The branch is where they have, an office space. They have to pay for these employees, and they have to pay for this rent and all these different things that they have. So they have a margin, and their people who run that branch have to make money on that as well. And then you have the loan officer compensation. When you are a broker, you essentially skip the branch margin. So this is wholesale rates with very minimal loan officer compensation. And this allows me to give people great deals, basically. And I can say, okay, hey, for this particular scenario, this particular wholesale direct bank is going to be best. And we can go that route. So we can modify this to whatever the loan situation is. Maybe it's someone with low credit FHA. So let's look at that. Let's look at FHA. Let's say you're buying a $650,000 house in San Diego. Let's see, what's 3% of that? 21,629. 3.5% is the minimum down payment. Did I get it right? Almost got it right. So it's 628 maybe. Still didn't quite get it. My mental math skills are eroding. All right, so let's say this person has like let's see, what's the average credit score? About 680. A 680 credit score. I think it's 686 or something. So let's just call it 680. You're buying a single family home for 650. San Diego. Keep everything else the same. And we're going to actually change this to a purchase. Buying a house, FHA. All right. And this is no lender fees, no points. So you're not paying any lender fees. You're not paying any points for these rates. Pretty cool. Very, very nice. All right. So this, you can see this is a different bank that's at the top now. And as you go through these different programs, that's one of the things you really start to notice is that different banks will have different pricing. And so as a broker, you want to be able to go to whoever's going to give your client the best deal and not have to charge them any fees. And in fact, in this case, you can see you can get the 2.75 on this deal and get $2,300 towards closing costs with no lender fees and no points for that rate. That's pretty cool. So this is how this stuff works. And I'm going to go into more detail on this with different programs in the coming months. We're going to pull rates on a regular basis, take a look at them. Hey, what is the average rate? What is this? So here's what's interesting with the FHA. So let's check out 780. FHA is designed to be very friendly to people with lower credit scores. Let's see what the difference is between 680 and 780. Not that much. Same bank at the top, different bank in second. 2.65, so barely any improvement. So that just shows you that FHA is really trying to help hook everybody up, even if you don't have a great credit score, which is exactly what it's there for. That is precisely how that should work. Conventional is different. Conventional is more for what you would call like a standard buyer. So let's do one here that's conventional for fun. You need 5% down on this one, so we'll just do around there. It's a 780 credit. Let's see how this one looks. So we did VA, we did a refi, VA refi, we did FHA. Now we're doing conventional with 5% down. You still get 3.25. So when you say like, hey, rates have gone up, rates are higher, but they're still really good. 3.25 is really, really good. Now let's see what happens if we do a conventional refi. So this is going to be a lot of people are going to be interested in like a rate and term refinance. A lot of the refinances we've been doing because property values are so up, it's like really low loan to value. So let's just do like 625 loan amount, $1 million value, keep everything else the same. Let's see what the rates are. And this is totally behind the scenes. Like, I don't know if I'm even supposed to do this, but ask for forgiveness versus permission, right? And so 3.25 as well on this one. You know what? Let's check this. This will be fun. Let's see if it was under 60% loan to value. Would that make a difference? We'll do it 59. Okay. There's rate term refinance, conventional. Will this make a difference? And that's why the appraisal is important. And it did. You know, rates got a little bit better, but still 3.25 is the par rate or the rate that doesn't cost anything. Yeah, no fees. You get $1,700 towards closing. See, it doesn't always work out perfectly. You see on this column here, it says discount rebate. This column here shows you, let's see if I can zoom in on that a little bit better for you. How far will it let me zoom in? Yeah, it starts to get ugly. Okay, so right here in this column, discount / rebate. So discount is if it's in the red, that means it's a cost. Rebate is in the green. Discount means you pay the money. Rebate means you get the money, right? So you can take a 3.25 here and get $1,735 from the bank. Isn't that crazy? You get the money. We're not pocketing that money. You're getting that money. 3.25 or 3 1/8, it would cost you $2,300. If you're doing a refinance, you can pay your discount points inside of the loan. You don't have to pay them out of pocket. And you can do as much as you want. There's no limitation to that. It's not considered a cash out, even though you're getting money to pay for the rate. Since you're paying for the rate inside the refinance, you can do as much of that as you want, or as you have room for. Sometimes it doesn't make sense though. Like, for example here, you say, okay, well, hey, I want 2.25. Well, 2.25 is going to cost you $33,000. Does that make sense? Well, let's look at the payment. For 3.25, be $2,568. For 2.25, $2,255. I think I can do this one mental math. $313 savings. So we have a $313 savings. How does that pencil out? Come on, calculator. No? All right, fine. 313, it's $33,176 is the cost divided by 313. It takes you 105 months, 106 really, which is almost 9 years, 8.8 years to break even on that. So you got to really plan on owning that property for the rest of your life in order for that to make sense. It's 8.8 years to break even. And then you really need several years of that to really have it make any sense. If you're paying $33,000, that means you need another 8 years to make $33,000 to have, 100% return on your investment. So that to me does not make any sense. But some people just want the lowest possible rate. You can get it. You don't have to go down that far. You can go anywhere you want in here. That is how rates really work. And if you're getting a loan, you should ask your loan officer to show you this stuff. And one of the things I'm going to do, I'm making essentially a what to do when you refinance video here in the near future. I'm outlining it right now, pretty detailed. But basically, especially when you're purchasing, there's a couple things that you should ask your loan officer to do to make sure that they're not going to be able to bait and switch you later. And one of the things you have them do is you have them take a screenshot of the rate sheet and send it to you. That way you can see when they initially quote you what the rate sheet looks like. And you also have them take a screenshot of mortgage bonds. So okay, hey, like for example, let me zoom this back in. So I zoomed it out so much. For example, if someone, I always feel terrible when we quote someone a rate and then rates get worse. I feel like, I'm the messenger to be shot in that situation. And so I will frequently, if it happens, let's say that I quoted someone a rate up here and they got into contract down here, I'll do a video for them and show them, here's where we quoted your rate and here's what's happened to rates since then. And this is the reason why your rate is worse now. Most loan officers won't do that. I don't know anyone else who's actually doing that, but you should ask for that. Ask for a screenshot of where mortgage bonds are when you get quoted so that someone can't pull one over on you. For example, if you got quoted here and then you got into contract here and someone's trying to tell you that rates got worse, well, you can see rates did not get worse. Bonds are the same, if not better. So, you lied to me to begin with. And so I'm going to go through that process of explaining, hey, have them take a snapshot of the bond chart, have them take a snapshot of the pricing chart. And if you get to see both of those things, you will have a complete view of the behind the scenes so that you can make sure that you don't get a bad deal, that you don't get bait and switch. There's still a lot of bait and switching going on in this industry, unfortunately. So that is the first of many looks behind the scenes at this. And I'll wrap the video up for now. I'm going to do another video here in a second, but it's going to be separate. It's going to have a totally different topic. So give me a call if you want to look at a refi opportunity. If you want to buy a home, get pre-approved. I can help you with that very quickly as well. Call, text, send me an email, NMLS 155010. I'm here to help. It's what I do. I love it. I enjoy explaining this stuff. You're not bothering me. A lot of people think I'm too busy or something like that. You're not bothering me. This is what I do for a living, literally. So feel free to reach out. Send your friends my way. I appreciate it. Everybody have a good day, and I'll see y'all soon.